Good morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. Starting with looking at equity market returns yesterday, we saw global equities come under pressure. US equities led the way with weakness from the S&P 500, now down at its mid-December level. We also saw weakness in UK equities and European equities, but to a lesser extent. The weakness follows a trend that we've seen year to date where equities have sold off in response to higher bond yields, specifically US government bond yields, where investors are reappraising their expectations for interest rate hikes. To give some context and some numbers around that, going back in October, investors were expecting 2 US interest rate hikes for this year. That's been adjusted upwards to 4. So we've seen bond yields push higher. Investors are expecting higher interest rates, and that's on the back of the higher inflation prints that we saw last week, where we saw inflation coming at 7%, and also strength of the US labour market. Adding to the weakness was just some concerns around the strength of earnings growth. But we have to remember the rate of earnings growth is coming from exceptionally high levels from last year. In terms of economic data, we had more data from the UK, just building on the comments that we had from Jeff, where we saw strong UK employment numbers. We had inflation data which came in at 5.4% for the year, so a very high reading, the highest reading since 1992. The rate of price increases was broad-based, so we saw increases from furniture, clothing, household goods, energy and food prices. So we have inflation at 5.4%, and that's higher than wage growth, which is currently at 3.8%. Given that, and given the strength of the employment data, this is putting more pressure on the Bank of England to raise interest rates for the second consecutive meeting. So what does all of this mean? Well, if households have built up cash savings during the pandemic and you have interest rates still near record low levels at 0.25%, the real value of that cash is being eroded. So it does make you think that you need to do more with your money to ensure that you're protected against the rate of inflation. That's all from me today. Thank you for listening, and we'll see you next time.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.